Welcome back, guys, to another video of Forex Beginner's Guide. This is video 110. Now, today's video is about what is lot size. So, it represents the quality of asset being traded and determines the scale of your trade. In Forex trading, lot size is the amount of volume of a currency that you're buying or selling in a trade. Think of it as a number of unit you're trading. The larger the lot size, the bigger the trade, the more the exposure you have to price fluctuation. Lot size directly affects how much you can potentially gain or lose in single trade. For example, if you trade a larger lot size, even small price changes can have a bigger impact on your profits or your losses. Types of lot sizes in Forex. First lot size is the standard lot size. A standard lot size is the largest unit in Forex. It represents 100,000 units of base currency, the first currency in the pair. For example, in the XAUUSD pair, one standard lot represents 100,000 ounces of gold. It's also called as 1.00 when you're trading in the financial markets. The second lot is the mini lot. A mini lot is 1 to 10th the size of the standard lot. It represents 10,000 units of the base currency. For example, in XAUUSD, one mini lot would be 10,000 ounces of gold. It's also seen as zero point 0.10 when you're trading on your MetaTraders or your trading apps. The third one, micro lot. A micro lot is even smaller, representing 1,000 units of base currency in XAUUSD. One micro lot would represent 1,000 ounces of gold, also known as 0.01 on your screens. The fourth one is nano lot. A nano lot is less than represented 100 units of base currency. This lot size is usually used by brokers to allow very small traders with minimal risk. How does lot size affect your trading? Your lot size determines how much you're risking per trade. The larger the lot size, the bigger potential reward, but also higher the risk. For example, number one, with the standard lot size, a 1 pip move in XAUUSD could mean a profit or loss of around $10. The second, with a mini lot size, the 1 pip move can lead to a profit of loss or loss of $1. Number three, macro lot, the profit or loss per pip move can be $0.10 per pip, which is also 0.10 cents. Example of lot size in action with XAUUSD. Let's say you're trading XAUUSD, which is gold versus US dollar, and the price is 1,800 per ounce. If you open a standard lot, you're effectively trading 100,000 ounces of gold. Excuse me, guys. Now, let's say the price moves from 1 pip and the price moves up to 1,800.01. Uh, if you're trading a standard lot, 1 pip move will make or lose you $10, as mentioned in the previous slide. If you trade a mini lot, the profit or loss will be $1. Micro lot, 0.10 cents. This shows how different lot sizes affects the amount you're risking and the potential reward. How to choose the right lot size for your trade. Number one, account balance. If you have a smaller account balance, it's safer to trade smaller lot sizes like micro or mini to manage risk. Number two, risk tolerance. Your lot size should align with your risk management strategy. For example, if you're willing to risk only 1% of your account balance on a single trade, you should adjust your lot size accordingly. Number three, market volatility. In more volatile markets like XAUUSD, you may want to reduce your lot size to limit risk, while in quieter markets, you might increase your lot size to take advantage of smaller price movements. Lot size and leverage. Lot size is also closely tied to leverage. Leverage allows you to control a larger position in a smaller amount of capital. For example, if you're trading a standard lot which is 50 to 1 leverage, you'd only need to deposit a smaller proportion of total value of the open value to the open to open the trade. However, leverage increases your exposure. So while it amplifies your profit, it can also magnify losses. That was all about lot sizes, guys. I hope it all made sense. Make sure that you watch all the other videos to gain knowledge in this industry. Make sure you watch all of them before you take any actions in this industry. Hopefully that all made sense, guys. I'll see you guys in the next video.